Hey, what's up, guys? Today, I wanted to share three revenue generating protocols that I'm bullish on, why I'm bullish on them, and my strategy with each position, and kind of share a few tips along the way. Hopefully, it helps you out as a yield farmer or as a DeFi investor. And once again, this is not financial advice. I'm just sharing what I invest in. And if you're new here, my name is Richard. I'm a yield farmer and DeFi investor. So one of my favorite DeFi investment is Pendle. If you don't know what Pendle is, it's a yield fixing protocol and you can trade yield as well. But we'll take a closer look in a little bit. But basically, my goal for this position is to bet on Pendle's outperformance against Ethereum. I believe that Pendle would do decently well in the upcoming altcoin season. Hopefully, it swings back up against Ethereum. You can see this is on the Pendle to ETH chart right now. And when that happens, I would be gaining a net positive in Ethereum profit if Pendle outperforms Ethereum. And this happens because if I enter here at the green line, I'm buying some Pendle at this price to put into the pool, right? And as Pendle's price go up in value against Ethereum, then I would be selling my Pendle for a net Ethereum profit. And that's typically the goal for a lot of these altcoin pairs that I'm currently yield farming. At the end of the day, it doesn't matter how long it takes, like 6 months, 12 months, sometimes like even years. But my ultimate goal is to be able to close at an Ethereum profit. For example, if I start out with like 2 Ethereum, I want to be able to close at like 2.5 at 3 Ethereum at the end of the day, right? And then when I close my position, I could take that Ethereum profit to reinvest into other investments, or I could just take that profit and spend that profit and still have that initial Ethereum exposure. So we can dive a little bit deeper into Pendle, but it's basically a yield fixing, yield trading, or hedging protocol. You could do a ton of things with different yields. And one very simple way to use Pendle is to simply buy the PT tokens, right? For example, if you want some exposure to USDE and the yield is quite high, then maybe you could consider fixing the yield. And the yield could be higher and lower depending on a couple of things. The first is the underlying asset. If USDE is generating a lot of yield because the funding rate is really high. If you haven't looked into USDE, basically they make the yield from the funding rate delta neutral strategies, right? So if the yield is really good and I'm happy with the duration, for example, if I want to be in this position for like 49 days and earn this amount of APY, I could be buying this PT token, right? But if I am an airdrop farmer or I want the yield of the actual USDE, because I believe that the yield would go up, I could be buying this YT token. But basically what this YT does is it allows you to earn the yield of the underlying asset. And you also get some airdrop points as well. So if you're speculating on the airdrop or the rise in yield, you want to be buying this YT. And it is more capital efficient if you are trying to trade the yield. But for most investors, if you're trying to get a fixed yield, one of the very simple way is to buy some PT. And let's say I want to basically earn some nice yield over the next like 40 something days, right? I could be buying, for example, 1,000 USDE on this hyper liquid market. And depending on the market, there's some pros and cons, right? For example, on hyper liquid, the gas would be lower than on ETH mainnet. But it is a newer chain, and that's something to consider as well. And you can see if I'm swapping from USDE, I would be gaining this 1,012 USDE, right? I could put $10,000 as well. If there's enough liquidity, the effective APY would not drop by a lot. So this is the actual APY that you would be getting because I will be able to redeem this 10,123 PT USDE for the same amount of USDE at maturity. So at maturity, meaning that I would have to wait to this date if I want full redemption. And you can exit the position anytime as well if the yield drops, and then the PT token would be rising in value. But if the yield keeps spiking, you would typically need to hold to maturity to not lose money before you exit the position. So you can think about this kind of like a zero coupon bond, where you're not actually getting like, cash flow from the payment, but you're basically buying like US dollar at a discount, right? So let's say I put in like $9,880. I would be getting this $10,000 at this maturity date, right? So that's a very simple way to use Pendle. But what I really want to take a look at is the revenue it's able to generate so far. And you can see that the growth has been pretty good over the last year or two, right? Pendle has been steadily growing in terms of total value locked. If we look at the total value locked, there was a huge spike, but it came down a little bit recently. And this is completely normal if people are trying to farm different protocols. So it's not a big concern in my opinion. And if I look at the fees and revenue, it has been steadily growing over time. You can see over the last 2 months here, Pendle was able to generate about $6 million in revenue, right? Sometimes when things are a little bit slower, the revenue would drop to about like $2 to $4 million. So that's really solid considering that a lot of crypto products actually do not generate a good amount of revenue. And if I put it on the Google sheet here, at the current valuation, Pendle is at about like 1.36 billion FDV. And if I expect the average revenue to be about $4 million for the 30 days time period, then we have this amount of annual revenue, right? And this FDV to revenue metric is very helpful in my opinion, because it's taking the total token supply and the total fully diluted value and then comparing it against revenue. So the higher the number, the more overvalued a particular protocol is, and the lower the number, usually the more undervalued it is. But you got to see where the revenue is coming from as well and where it's distributed. For Pendle, 80% of the revenue goes to the Pendle voters. So you can look into that as well. And again, you guys want to fact check me, right? Don't just make investments based on what I say. You should be fact checking and doing your own research. But you can see Pendle APR historically has been pretty good at like 42, 43%. And sometimes it goes down, sometimes it goes up. That's completely normal. But overall, for Pendle holders, it has been pretty good. And you can lock your Pendle to basically get Pendle if you want to lock the token for longer term investment. I'm not locking my token because again, my strategy is to yield farm this pair in a concentrated liquidity pool and hopefully close in a profit in the next 6 to 12 months. So if I'm actually investing for the next 10 years, or like I believe Pendle is going to be around for the next 10 years, I could decide to lock some of my tokens here, right? But at current valuation, it's not too bad. It's not too hype, but it's not that cheap either. So if you're entering right now, it's close to fair value in my opinion. But basically, if the revenue keeps going up, I would expect the price to move up as well. And not only can you fix yield with Pendle, you could also trade yield with Burrows, which is a new platform that they recently launched. And I believe that the revenue would tie back to the Pendle holders as well. But basically what you're able to do with this protocol is to trade yield on different things like the funding rates. I believe that's the only markets that are available right now. But in the future, other types of yield, you'll be able to trade or hedge on Burrows as well. It's very bullish in my opinion. And I believe that a lot of protocols that either add to like the speculation side of things, the trading side of things, that allows people to make money, or a protocol that does like genuine financial services that is useful, like rate fixing and stuff like that, or lending and borrowing. I think that there's actual real economic value there. Pendle kind of captures both. That's why I like this protocol. And again, just because I invest in Pendle doesn't mean that you should, right? And the next protocol that I want to talk about is Pump. Pump.fun is basically a meme coin launchpad, and there's also a live stream function. Basically, people live stream and sometimes traders would speculate on these live streams, right? And then as creators, they make trading fees as well. And throughout the whole process, Pump is generating some fees, and that fees is being used to buy back the Pump token. You can see so far, they've bought back about 8% of the total circulating supply. Every single day, they're buying back more than $1 million worth of Pump. And this number could go up and down depending on what they do. Right now, they're buying close to like 100% of the revenue they generate into the token. In the future, maybe they would change it. In my opinion, Pump is a better investment compared to stuff like Zora, which also is kind of a token launchpad where creators could make posts and make like creator tokens and stuff like that. but you can see the revenue is not nearly as good, right? The peak monthly revenue they had was like 2.51 million, and Pump's revenue just surpassed that in like 2 days, right? So that's something to consider. And there's different platforms as well, like Let's Bonk, that kind of picked up for a few months here back in July and August, but clearly it did not actually overtake Pump. And Pump is still able to retain dominance in terms of meme coin launchpads, right? The downside for this investment is that if a lot of people are not trading memes or if people are just not making tokens, then their revenue would drop, right? But at this current valuation, I'm happy. My entry is at about like 0.0046. So I did buy it at a lower valuation. And the revenue, I use a more conservative revenue as well, like a $30 million per month. So roughly 1 million per day estimate. And it's at 18 FDV to revenue, right? And just for context here, a lot of tech stocks do trade at 30 to 40 price to earning ratio or even higher. So I'm willing to take that bet here on Pump at this current price. And I don't mind if the price go lower, I would just compound down, accumulate some Pump, and then sell a portion of my fees to deep risk. So that's not a big deal. And in my opinion, Pump is still going to stick around for the next 6 to 12 months. And if we get a market-wide altcoin season where a lot of mid and low cap altcoins are pumping, I believe that Pump would move up pretty aggressively in price as well. So the last protocol that I want to cover is Hyperliquid. Hype has been very popular in the last few months here, and I'm sure you've heard of it already, but it's basically a perp stacks platform. The UX and UI is really good. And they did like a community first approach where they airdrop a lot of people money. And also they're buying back a ton of their tokens, right? So you can see the monthly revenue for Hyperliquid has been pretty good, above 50 million per month. In July, we saw 90 million. August was a peak at 110 million. September, 80 something million, right? And then this month would probably be above 60 or 70 million as well. And if we look at the top revenue generating protocols, you can see that Hyperliquid is at the top of the list, right? If you don't include USDT or the USDC, which a lot of their revenue is not going to us anyway. It's going to the company directly, right? But if you're investing into Hyperliquid, they're buying back the token with most of their revenue. So it's going directly back to the holders, right? So same thing with Pump. That's why I'm bullish on these two assets. And again, these two assets have been like the revenue leaders for this cycle so far. But with every investment, there's a downside, right? Pump, for example, can have future competition, or if they're not able to retain the users or the traders, then of course their revenue would drop. Same thing with Hyperliquid. There's a bunch of different perp dexes that is trying to make more money and compete against Hyperliquid, stuff like Aster or Avantis. I believe EdgeX is a perps trading platform as well, and stuff like Lighter. But I'm still bullish on Hyperliquid as the market leader. And they also have the Hyper EVM, which is important if they want wider DeFi integration. I think Hyperliquid is still moving in the right direction, so I'm still very confident in the project. And before I hop off here, I want to talk a little bit about my strategy for Pump and Hyperliquid. So for Pump and Hype, I'm in two different pools. The first one is in the Pump and USDC pool. If I pull up my wallet here on Metrics Finance, and I do like to use Metrics Finance if I'm tracking multiple wallets, you can see sometimes I will be sitting in some unrealized losses, which is completely normal if you guys are yield farming concentrated liquidity pools or altcoins. Again, nothing is guaranteed when you're yield farming altcoins, right? So that's something to consider. I am taking the market risk here with the Pump, but basically for Pump and Hype, these are my two pools. The first one is on Project X. It's farming the points there, and I'm bullish on both projects. So it doesn't matter even if I fall out of range for these two tokens, right? And I can dive deeper into each position for you guys to see. But basically, I'm setting my range from the minimum price of 0.00004 and the max price of around 0.0004. So roughly 30 on the max price and then 4 zeros on the minimum price, right? And some of you guys asked me, how would I be setting the range for a pair like Pump to Hype? What I like to do is I would pull up the Pump chart, right? And then I would put divide by Hype. And then you could select like a index chart, for example, this one. And then if I hit enter into the trading view chart, it's going to allow me to pull up this Pump to Hype chart, right? And if you don't know how to read this chart, it basically means that pump is the base asset, hype is the core asset. So everything is being valued in hype. So for every one pump token, I could buy 0.000134 hype at this current price. So if it drops, it means that I would be able to buy less hype token, meaning that pump actually is underperforming hyperliquid, right? But if pump is outperforming hyperliquid, I should be able to buy more hype at the end of the day. So my goal for this pool is to actually have pump outperform hyperliquid. And this is typically the case if I am investing into the lower caps. I want to bet on the lower caps outperforming the larger caps. Otherwise, there's not much point to bet on the lower caps. And of course, it doesn't always happen, but that's the ideal case scenario. But again, because I'm bullish on both assets, it doesn't matter if the price break either way. And basically my range is at 0.0004 here. And the top side is also 0.0004 with 3 zeros. And again, because I prefer using the larger caps as the core asset, the decimal point might be a little bit confusing when you guys first start using it. But the reason why I like it is because I am just looking at the chart going up, rather than having to think in reverse or having to inverse the chart like this, right? If you use the smaller token as the core asset, you will have to inverse the chart and you're basically betting on the chart going down rather than the chart going up. So it's up to you what you use, but basically the reason why I set this range is it allows me to stay in range for quite a while. You can see I added a little bit of a buffer based on pump's all-time low against hyperliquid, and I allow like a 3x outperformance of pump against hyperliquid. The reason why is because I believe that smaller caps would be outperforming larger caps in the next 6 to 12 months. And hyperliquid is at a more aggressive valuation compared to pump, right? You can see FDV of hyperliquid is like $45 billion. And the FDV to revenue is at 55 roughly. And then for pump is only at like 17 or 18, right? So the FDV, I believe, could move up at least by 3x, but we'll see what the market does. If Bitcoin and altcoins start dumping, I don't think hyperliquid and pump would be immune from the dump. But I do believe that these two projects should do decently well compared to other altcoins in the upcoming altcoin season. And another great way to compare the strength of an altcoin is to compare it against others, right? So others is basically all altcoins excluding the top 10 altcoins. So if I pull up the pump to others chart, you can see pump has been outperforming others here in the last couple of months. Hopefully this uptrend continues. We'll have to wait and see how it does. And if I pull up hyperliquid, I can look at like the comparison as well. So hype to others. So you can see hyperliquid has been outperforming for quite a while. The outperformance has slowed down a little bit, but I still am a believer in the project. I believe that it could reach a higher valuation, maybe at least a 2x from the current price, but we'll wait and see. But basically, that's the main idea behind liquidity pools. You want to be yield farming assets that you believe in, right? So that's pretty much it for this video. I believe that these three assets are pretty solid. That's why I am yield farming and adding it to my portfolio. Again, your analysis can be different and it's good that it's different so that you actually invest into the project that you actually believe in and have the potential to grow. Again, nothing in investing is guaranteed, but if you want to learn more about yield farming and investing into DeFi, then be sure to check out the other videos on my channel. Thank you once again for watching. I'll catch you next time.